Week, they demoted the top European official and the top global manufacturing official. And now, as you said, Bill, they've got this new report. 93% of the loans that General Motors is making to buyers are going to subprime, risky buyers. 93%. And as of right now on Wall Street, the stock is below $20 a share. It has to be at 53 before they can repay all of that money. So they can't repay the government loan to them. They can't exit from bankruptcy. And President Obama is going to have a hard time claiming real success with the bailout of General Motors.
All right, now back up just a little bit, because the subprime loan goes to whom? What kind of consumer would get one? If
you've got a credit score, a FICO credit score of less than 660, you are considered a subprime borrower. 93% of the loans GM's making are going to people with a credit score less than 660. And the number of people who are getting loans with a score below 540, that's really risky buyers, that number is rising very, very rapidly. So GM is pinning its sales hopes on very risky borrowers.
Hoping that they pay it back.
Hoping that they pay it back and they get a goose in sales immediately, which is not happening.
GM is using subprime to increase sales.
Yes, please go back.
The market, right?
Just go back a ways and you'll find President Obama really going after predatory lending, unscrupulous lenders. And now General Motors is doing precisely that, pushing subprime loans to risky borrowers.
You also said something there. $53 a share has to be the stock price for the taxpayer to get their money back?
Yes.
And right now it's at $18 a share?
$18.19. We own
a long way to go.
Taxpayers own 500 million shares, 500 million shares. It's got to get to 53 before we can repay the $26 billion that GM owes us, the taxpayer.
Stuart, thank you. Got a long way to go.
Yes.
I mean, that's more than double, I think, right? Like 2.5 times.
That is correct, sir.
We'll see an FBI.